Yo, what's going on, Gem fam? Welcome back to the channel. Welcome back to DroppingGemsFX. You already know my main goal is to lace you guys up with advice and tips on how to take your Forex trading journey to the next level and to bring you guys along my Forex trading journey as well. Now, number one, before I start this video, I want to thank you guys for 600 subscribers on YouTube. We're climbing fast, man. We're climbing fast. I never really thought I would get to this level. Even though 600 is not like a huge amount of subscribers, I just never, imagined my channel would get noticed as much as it is and as it has gotten noticed in the past so far. But let's get right into this video, right? So as per the title, I'm going to walk you guys through a Euro USD scalp that I took that netted me, I think, about 1,600 in about 3 hours. So you guys will notice that for this particular trade, it was a lot different from my normal trades. I usually like to trade intraday. I usually like to hold my trades from intraday to swing trading. But this particular trade presented itself as a double top, a possible reversal, and I was gonna take it to a golden zone retracement to continue along, but that situation did not happen, and I ended up taking profits. I think it was probably like 10 pips or so, 11 pips or so. So it was a pretty aggressive scalp, but it worked out in my favor. And it only took 3 hours to fulfill, I believe. I either took profits or it hit my TP if I set a TP. But we're gonna evaluate the trade. We're gonna go through, why I even took a short when the momentum was definitely a long bias and I should have been looking for bias. Why I took a short, what was my rationale? Without further ado, guys, if you like these types of breakdown, analysis, recap, whatever the case may be, drop down below, tell me in the comment section, like this video, keep on running up the channel, tell your mother to subscribe, tell your father to subscribe, tell your little brother, your little sister, your older brothers, man, tell your roommates, tell your doctors, your dentists, just fucking subscribe, bro. Without further ado, let's get right into this video. All right, guys, so you know the deal, man. We're on Euro USD, right? And as I said before, I took a short position, short position, more like a scalp. And I'm gonna show you exactly what was my rationale. So if we can come right here on the daily time frame where I do all my analysis, right? First, we can see that we're pretty much in a downtrend. This could possibly be a head and shoulders pattern happening, whatever the case may be. But it's definitely evident that we are in a downtrend. So let's mark some trend lines. Okay. So we have that bottom trend line set. And this is rewinded, so the candlesticks are rewinded to, I believe, this Sunday, right? The market's open on, Sunday the 4th. So this was probably during London session in the morning, okay? So let's see what happened, right? If we go down to the 4-hour time frame, I wanted to address this real quick, right? So this 3 candlesticks right here, right? These 3 kind of look like a morning star formation, which is a reversal pattern. And it's not the cleanest because usually I would like the star to be, the body of the star not to be touching the bodies of the left or the right candle. But in this case, we closed, the right candle closed just above what would be resistance, right? So that was pretty significant to me, right? Just above. And on that Friday, kind of retraced a little bit, right? Not only that, we had a little bit of that double bottom, which made up that morning star, right? And so my initial plan was to take a long position from somewhere in this level, right? So I observed that price kind of broke through this resistance, right? And I wanted it to retest as support and turn around. What ended up happening was I got in a very aggressive position Friday afternoon, very aggressive position, I believe somewhere around here, right? And it was on a Friday, and I decided to hold the trade over the weekend. It opened into profits and was heading very well. My TPs were way up here. Very well into profit, and so what I did was kind of tighten my stop loss just below this wick at 1740, and I got wicked out, and it came all the way down to 1737, and then skyrocketed, which was kind of unfortunate. But my target was definitely, these highs, watching out for these resistance levels up here, right? Okay, so that was a missed opportunity. And one of my mistakes was definitely not, putting a trend line through here and understanding that, number one, if I connected all the wicks, right? Number one, it came to retest the breakout of this trend line, right? That's number one. Number two, we had this Fibonacci golden zone retracement, straight to the golden zone and reverse. So that's number two. And number three, obviously, we had the morning star reversal confirmation. So I definitely took some early aggressive trades and, got stopped out before prices, targeted my TPs without me. But I was preparing for the next move, which would have been a long from here had we gotten a retest and continued to the upside. That never happened, right? As you guys probably know, if you're trading your USD in the past week, price just skyrocketed, and I think it's still going right now. So at this point in time, intraday, I was watching this level because we had some consolidation here. So I was like, okay, this may be the time where price can turn around and reverse. So I got out my fib, right? From the low to the high, marked out the golden zone, which didn't really, sit right with me in a way, because there was no other confluence as to why price would stop randomly here. We have some levels right here, but I didn't think that it was anything significant enough to be confident that price would stop and turn around in that area. If the golden zone ended up somewhere around here, that would make me a little bit more confident, even somewhere around here, but obviously that doesn't even make sense. But yeah, I usually like to have more than just the golden zone as a confluence to get into a long, or getting to that next leg, that next major movement. But like I said, I was looking at this area because price had stopped here and it was kind of consolidating, right? So I looked on the 15-minute time frame, I believe, okay? And I saw that price was approaching this high. Now, what I anticipated was, number one or two things could have happened, right? So the first was that price would come to this level and reject, right? And if it did that, it would create a double top, right? And if it created a double top and also passed this kind of small level of resistance that would have been support, key level. So if it crashed through this, right, and then came back, retested, and fell once more from this level, I would have targeted this wick down here, you know, which was a nice a little bit over 10 pips. And my second target would have been down here. And my third target would have obviously been the golden zone, but keeping in mind this structure in the past, right? This support would be support, right? Okay, so that was plan A, right? Plan B was simply price would break through here, come back, retest, and we would get in for that long once more, okay? So let me show you what actually happened, which one of these plans actually played out, and the candlestick price action, I guess, that allowed me to execute this trade without hesitation and to capitalize on the movements, right? So if I can take this all away, boom, boom, boom. Let's bring that zone back. It's very important. And why did I pick this particular area? Well, because price came through this area a couple of times. One, two, three, 4 times, right? And had a reaction from that area. So it's not like a huge zone, but it's something definitely on a 15-minute time frame that we need to be aware of. And the double top, rejection, crash through, and retest of that area definitely is what made me take this trade. Okay, so let me delete this and let me go ahead and play the candlesticks that followed after this kind of analysis. So we had this aggressive push up, which was definitely anticipated. And yeah, we were just watching the candlesticks to see what would happen, right? So on this particular bullish candlestick, right, we're definitely above, you know, the high that we made previously, right? Maybe like a couple hours before. We're definitely above that high, okay? But if we zoom out a little bit, maybe let's say to the hour, I believe, to the hour, it's a clear double top. It's a clear double top. Yes, we have a long wick, but obviously that means that price is just weak. It cannot sustain that level. Maybe people were taking profits from this long, you know, whatever the case may be. But that's definitely a clear double top on the hour time frame. The 15-minute time frame, you know, people may be confused, maybe not perceive that as a double top, but I did. Okay, so I noticed that on the hour time frame, and like I said, I wanted price to crash a little bit down, crash beneath this would-be support, retest as resistance, and I would get into the trade. And let's see what happened, right? So boom, we get that very, very aggressive bearish engulfing candle. We got this nice little kind of hanging man at the top. And so what ended up happening was, I believe, let me check the phone so I'm not speaking out of my ass. And I'll put the screenshots up. I believe I took the trade from 1812. So I took the short. Let's do entry price 1812.5, and my take profit was about a little over 10 pips, just a little over 10 pips. So 18, 0.017. And my stops were above this high, right? So obviously, if price came above that high, you know, essentially my bias would be wrong, you know? So that's how I go into every trade. Whenever I'm thinking of my defense, which is my risk management, I'm thinking at what point, at which high or low does price need to break in order for me to understand that my bias is wrong, right? Okay, so obviously, boom, we have that crash through, and also at the same time, if I play it, we get that crash through, and we get that retest on this candlestick. I think on this candlestick right here, I think I got into the trade, right? Pretty nice trade. We get the hanging man, we get that bearish engulfing impulse, we get that retest of the hanging man and rejection, which was very needed if I go down to the 5-minute time frame. So now we have this structure of a high, a low, a lower high, a lower low, so on and so forth. Come back and retest this, right? Boom, we get that rejection. I'm in the trade, okay? I am in the trade. And obviously, not even a couple minutes later, right, we get this huge impulsive move. Doesn't take me out. I think it retraces a little bit and eventually takes me out through the night, right? So that was about, let's say 15:30, 45, 1 hour, 15:30, 45, 2 hours. About 2 hours and 15 minutes, let's say, or 2 hours flat, because this wick would have taken me out. So it took about 2 hours for me to make $1,620 on this trade. And this was definitely a 1-to-1 risk to reward ratio. Not the best kind of, like I told you, it's not usually how I trade. I don't usually trade 1-to-1s. But this was a pretty nice setup. This week in particular, I found myself scalping a little bit more, which is very, very different. But at the same time, I do enjoy it. And I definitely think that I have to sharpen my skills on both, you know, being able to scalp and being able to identify and take swing trades. But essentially that's what happened. That's the setup. That's the thought process. And guys, if you enjoyed that video, if you enjoyed that breakdown, I have more coming. Definitely more coming. I'll do this very often because I like kind of reviewing my trades. Like I said, if you like the video, then like the video. Like, it's not hard. If you like the video, like the fucking video. And I'll catch you in the next one. Dose.